and welcome to Charting the Markets. With me, Sean Murison, Senior Market Analyst at IRG South Africa. On the economic calendar, we have had a slew of flash manufacturing PMI and services PMI data out today, out of Europe and the UK, most of which is actually beaten consensus, so slightly better than expected data out this morning. Volumes are impacted today. We do have that US Thanksgiving holiday. But let's look at some charts, and starting off with where it all does begin, which is the US dollar. So looking at the US dollar basket, we've seen this price now continue to retrace. We've seen it break a number of levels, and it has actually now traded below the 200-day simple moving average, and that's the blue line on the chart. Now that break suggests that we are no longer in an uptrend. We've moved into a sideways environment, and what you'll see in a lot of themes, in a lot of markets, it's a bit of a range trade environment rather than a trending environment right now. So with that, we look at trading between the levels. We'll just circled black there. We do have a bullish price reversal from oversold territory off that 102.75 level. And then we've had a false break of that 103.40. So I think if you're looking at getting long on there, you might want to see a bit more momentum to the upside because it is softening today. It will be lower volume trade today because of that public holiday in the US. But I think for the bulls, we'll want to see that price closing above that 103.40 mark before targeting and move back towards about 104.10. And in that scenario, if we do get that break, maybe having a close below a stop at a close below that 102.75 level might be a consideration for that. If we don't break above that, we don't see any sort of further upside momentum and do start trading that, I think we'd be looking rather than trying to trade between those levels, looking for a break or reversal off one of those levels. Certainly a downside break of that 102.75 level could bring some more downside, possibly down to that 101.55. But as it stands, we have a bullish reversal off support in a range-bound trading environment. We're looking for a bit more momentum to the upside with a close above 103.40 before we're targeting a move to 104.10 initially, and suggested stop on that would be a close below 102.75. If you look at the euro dollar, we can see this is also now traded above the 200-day simple moving average, suggesting that that longer-term trend is sideways. So again, a range-bound trading environment. We have had quite a strong momentum move higher. Then we've had a bit of a pullback, and now we intraday reversal, this red candle with that long lower wick being a hammer. And now we do have at the moment a bit of an engulfing pattern. So if this candle does close above the high of that previous candle, above the top of that body of that previous candle, we'll have a bit of an engulfing, suggesting some further gains are possible. Initial targets there would be 1.0963. If we can get through that, then I think the next level of resistance is sitting close to about 1.1065. However, we are sitting in overbought territory and we are in a range trading type environment. So that does caution that move higher. I think if you are looking at getting long into that move, if it does confirm that bullish engulfing, then maybe a relatively tight stop might be a consideration for that. Looking at cable, sterling versus the US. We also had a break of that 200-day simple moving average. We're also assuming a range-bound trading environment. For now, we are testing that level. So we did have a bearish engulfing from overbought territory off resistance at 1.2562. So looking at that, traders might have considered being short on that, having a stop loss and a close above this level, which would be getting tested quite closely now. I think if you do have a close above that, that would be an upside breakout, and we can start targeting me back to 1.2745. But would be caution about getting long unless we do see a break out of that. And if we look at the preceding price action, it is a suggestion of a short entry. So bit of a tricky one right now. We're testing resistance. If you're not involved, I think maybe it's better to just wait and see. I think on a short entry, you want to see a lower close, maybe below this low of that red candle, that preceding red candle at 1.2488 before looking for further downside towards that 1.2300. If you are looking for a long entry, a bullish, and then maybe waiting for a confirmed break, a strong move above that 1.2562 might be a consideration, and then targeting a move to 1.2745. And in that situation, then looking at it's a bit tricky as to where to put your stop, and you do need to be cautious. We are sitting in overbought territory right now as well, but maybe below a 1 or 2 day low. I think these candles are relatively big, so probably a 1 day low might be a consideration if you are trading the upside breakout. For me, I do generally like to see a breakout and the first pullback from a breakout before getting long, but these moves can be quite quick. we'll just have to wait and see. But we're waiting for confirmations in either direction. Close below the low of this red candle for further downside, a close above resistance, significant close above resistance for further upside. Moving over to some indices now, starting off with the US Tech 100 or the NASDAQ 100. So a while ago, we looked at this bullish move out of oversold territory, the divergence, and that's gone a lot further than I thought it was going to go. We certainly broken through a lot of resistance targets. I think that suggestion is that that longer term trend is still up. This was a bit of a false break of that trend because we are now testing highs, certainly highs over the last year or so. So technically we have had a bit of an upside breakout. So if you are looking at long, then where to put your stop, maybe on a close below that 15,750 mark. But do be aware that we are in overbought territory. And volume today is relatively light because of that public holiday. But where could this price find resistance if it does start to settle above that 16,000 level? We have to go quite a bit back there and to see our next levels there. But you're looking at somewhere between 16,670 and 16,750 as further upside targets. S&P 500. We have a similar situation. Obviously, a lot of the same shares weighted on the NASDAQ weight the S&P 500. We had a bit more of a substantial break of that 200-day simple moving average. So our assumption was that we'd moved into a range-bound trading environment. At this point in time, we are testing the highs. I think you start taking out those highs and you can reaffirm that longer-term uptrend. For me, quite a lot of momentum to that move up. My preference here would be to look for pullback from overbought territory to find long entry. Pull back towards that 4,460 mark. Although if you do get a confirmed reversal, there is a case to be made of taking a short position in lieu of that range-bound trading environment. But for me, how I'd approach that right now is there's some strong momentum to the upside. We are looking a little overbought. I'd like to see a little bit of short-term weakness so I can enjoy that upward momentum. So looking for a pullback from overbought territory, somewhere back towards about that 4,460 mark. It doesn't have to get there. Maybe it falls short of that level, but we see a nice price reversal. That for me would be a good long entry into the S&P 500. Now looking at the Germany 40, this is an example of a market that has been in a range-bound environment for quite some time. That price still whipsawing back and forth through that 200-day simple moving average. We are testing resistance at that 15,990 mark. We want to see how the price handles that level. We'll see if we close above, suggest an upside breakout. And then next level of resistance being 16,330. But again, these moves have been quite sharp, so it is a very tricky time to be trading. But the momentum is up, but it's put markets into overbought territory, which is what creates that a bit of ambiguity in markets. So my preference always in that is to buy into pullbacks. So if they're overbought, and I think the trend is up, which is not the case here, but I'd use signals in line with that trend. So at the moment, we are overbought at resistance. And so for me, I would consider short entry if we do see a significant close, a proper reversal, price finding proper resistance on there, which it's testing now. That would be at a close below that 15,850 mark. In that situation, we're targeting move back down to 15,485 while looking at having a close on a close above that 15,990 odd level. Upside story would be a close above 15,990, suggesting upside break. A little bit more reluctant in getting long on that because of that overbought signal again. So I'd probably rather just sit and let that rally, see how far that rally takes us if we do get that situation. FTSE 100, range-bound price environment, which has been in a range-bound price environment for a long period of time. We have been trading between the levels. Become a little bit messy here. But off the 7,410 mark, we have had an upside breakout. We had a price rally, we had this pullback, and then we had this rally again. What I'd note here, looking at this chart, is if you look at this big green candle here, obviously some strong momentum to the upside. And then you look at all these red candles. It's taken 1, 2, 3, 4, 5 candles to erase not even all of the gains from that one candle. So that to me is still a suggestion that the momentum is to the upside. But we are overbought. I think new long entry. I'd like to see maybe a bullish reversal off that 7,410 mark, and then we target to move back to this high here at 7,531, and through there, if we can get above that, then start looking at 7,700. But at the moment, looking at that picture, we are overbought. That pullback looks weak relative to an aggressive move higher. So I do think there's a bit more, besides being in a longer term range bound environment, and we're still looking at trading off the levels, I do think there's a little bit of short-term upward momentum on that FTSE 100 right now. So moving over to some commodities, starting off with Brent crude. Now, this is also another recent break of that 200-day simple moving average. So things are changing in markets. So we're back to range-bound trading environment. Sharp reversal there. Very tricky to trade at the moment. We had, especially when you see a very 4% move down and the next day a 4% move up. So that shows extreme volatility in this market. So you want to trade here with a bit of caution. What is interesting is this long wick. The price came all the way down to the $78.50 per barrel marker, and it got rejected there and pushed all the way back up. So it shows you that is definitely a level where there is some accumulation going on Brent crude. So I would watch now, because we are below that level there, a move down towards that. I would think that that might be an area to look for long entry if that price does pull back further on that. Alternatively, for us, some upside momentum, you could also look at a break above. I think this level here might be losing relevance, 81.40, but certainly a high around there, about 82.80 odd. Close above that for 84.50. But in that situation, it's quite hard to put a stop loss. I think unfavorable risk relative to reward type scenario. So ideally, I'd like to see a bit of a pullback back towards that 78.50 mark before we start looking at maybe accumulating a little bit of Brent crude and from a range bound trading type scenario. Gold. So we had a nice pullback and we've had a rally and then we had a very quick pullback. I just circled this blue marker. We had this very shallow pullback, which to me, I view as quite bullish for gold in the short term, and because that pullback ended with this bullish engulfing candle pattern, and the price rally through and just falls short of that 2010 target. We are consolidating a little bit at this point in time, but certainly would consider if we do have a bit of a reversal of that 1970 mark again for long entry, or if we do get a break above 2010 dollars per ounce, then I would consider a move to 2045. Now in that scenario again, tricky as to where to put your stop. I think a close below a one or 2 day low could be a consideration. Another idea is to add something like average true range, a measure of volatility, and look at that distance as a volatility stop. Just another consideration how you can go about looking at stops on trades. Now, last but not least, spot platinum. We are sitting in that range bound environment again. Pretty much all the charts are sitting in a range bound environment, probably excluding that NASDAQ that we looked at earlier on. We're having a bit of a bearish reversal of that, which was the previous target, that 940 level. A nice rally towards that from oversold territory. Now we're having a bit of a reversal from overbought territory at that 940 resistance level. And that is suggesting 875 could be the next downside target from the move. In that scenario, we'd look at having a stop loss on the close above that 940 dollars per ounce level, because that close above there would also be, besides the stop loss, would be an upside breakout. And then we start looking towards 980 as a target. But right now, bearish reversal forming off that resistance and from overbought territory, suggesting that some short-term downside with 875, one of the major targets. You could probably be a bit more conservative if you like, having a target sitting there at about, call it $900 an ounce. Nice round number. All right, that's all the charts from me. Sean Murison, Senior Market Analyst at IG South Africa, and thank you very much for watching.